The information provided by Trading Forex Price Action to you does not constitute personal financial advice. The information provided is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice.
Midweek Analysis.
Hey guys, this is a midweek analysis for May 5th of 2021. Okay, we'll start off with the pound dollar. This is a monthly chart. We'll start off with an overview. So there was a weak double bottom right here. And since weak double bottoms typically do not go its target height, which is generally in this area right here, in the long term, I am short biased right back down to this pivot low right here. However, since there's a little bit more strength left in this double bottom, in the medium term, I am long biased right up to this pivot high right here. And at the moment, since I'm waiting for the weekly chart to show some direction, in the short term, I am neutral biased. Okay, let's talk midweek price. Alright, this is the weekly chart. Let's go over the setup that we've been looking at for the past couple of months. So there was a strong short trade right here, and then a weak long trade formed right here. So as price pulled back, I was looking for short entries right back down to this pivot low as a target, and that target was hit. Now at this point, I'm waiting for another long trade to form so I could gauge its strength. And if this long trade happens to be stronger than this short trade, then that's along with our medium term bias. So I'll take that long right up to this pivot high as a target. Now on the other hand, if this long trade happens to be weaker than this short trade again, then I'll be waiting for a pullback as far as possible so I could take a short right back down to this new pivot low as a target. Okay, so in the short term, I'm just waiting for this long trade to form so I could gauge its strength and see if I should take a long right up to this pivot high target right here, or if I should take a short right back to this target down here. Alright, and there was an intraday short setup on the daily chart that we were talking about. So let me just show you what's happening with that. I'll go over to the daily chart. Okay, so if you recall on this daily chart, the last short trade that formed was right here, and that stop loss level being right at that pivot high right there. And I was talking about how if price gives us a nice pullback, minimizing my risk, because the stop loss is right here, right? Then I'll be taking a short entry with this first target right here, and that second target being right here at this level. Now that first target was hit the following day, so I took out 80% of my position, and now I'm just leaving 20% of the position in to see if price could get to the second target right here. Alright, so let me explain this setup in more detail, so I'll take you to the 4-hour chart. Okay, so on this 4-hour chart, the last short trade that formed was right here, and then a long trade formed that was a little bit weaker than this short trade, and then another short trade formed yesterday, and then today another long trade formed right here. Now both of these short trades are slightly stronger than these long trades, however it's very slight. Thus there's a high possibility that price may range in this area for a while. So there's two reasons why price may range here. Now first is that these short trades are not that much stronger than these long trades, thus there's not much power differential between the longs and shorts. And the other reason is because this general area right here on the weekly chart has many gaps in it. Now when price gets stuck in these higher time frame gap levels, price often just ranges about on the lower time frames, as you can see here. So at this point, my original stop loss was at that daily pivot high right here, but that stop loss was already moved to a break-even point right here. So at this point, that short trade that I took has no risk. Now what I mean by no risk is that there's also no carryover interest on this pair if you're taking short trades. Thus, even if price does range around for a while, there's literally no risk to holding this short trade at this point. So currently, there's 20% left in that position to see if price could reach that second target way down here right here. Now the reason why I'm targeting this second target right here at this pivot low is because this is where the last long trade formed on the 4-hour chart. And a common way that I set targets is by using the tendency of the market to stop out the players that are on the wrong side of the market. However, I do want to note that even if there is no risk for this short trade at this point, I'm always watching the lower time frames like the 1 hour, 15 and 5 minute charts to see if there's any strong long price action that forms, in which case I will abort the trade even before it hits that stop loss level at this point. Okay, so aside from this, for the time being, we're just waiting for that short-term bias to form on the weekly chart. Okay, so let me go back to the weekly chart. Okay, but for the time being, we're just waiting for a long trade to form on this weekly chart so we could gauge its bias and decide whether we want to be long or short biased in the short term. Okay, let's go on to the Nzdusd USD pair. Okay, this is the weekly chart. We'll start off with an overview. So since this long move right here, starting from this range right here, was solely based on momentum, in the long term, I am short biased right back down to these pivot lows right here. However, since there's a little bit of momentum long still left in this move, in the medium term, I am long biased right back up to this pivot high right here. Okay, let's talk midweek price. Okay, this is the 4-hour chart. Now, if you recall, the last long trade that formed was right here, and that stop loss level being right at that pivot low right here. And so I was mentioning there will likely be a medium strength long move in the future. However, I was not willing to take this long trade for a medium term target is way up here. And for me, this long trade right here was not strong enough to target such a distant target way up here. So at this point, I'm waiting for one of two things to happen to take that long entry to our medium term target at this pivot high up here. Now, one is quite simple. Now that's for price to pull all the way back here, make an even stronger long trade than the prior long trade right here, and that would be enough reason for me to take a long right up to this pivot high target right here. Now the other possibility is on the weekly chart, so let's go over there. Alright, so on the weekly chart, try drawing these trend lines from this pivot to this pivot right here, and the other one from this pivot to this pivot right here. Now, if price could pull back to these trend lines and make compact price action on it on the daily 4-hour or 1-hour chart, then that's another reason I may take a long trade right up to our medium-term target right up here. Now remember, compact price action means the distance between each peak within the price action is very small. That's referring to these areas right here. Okay, alright, so there is an intraday setup I'm currently looking at, so let me explain that to you. Okay, we'll stay on this weekly chart. Now at this point, another short trade on this weekly chart may form. Now that depends if this current candle right here closes as a red candle. In other words, if this candle closes lower than the price that it opened. And if this second red candle forms, the stop loss for the short trade will be at this pivot high with the target right down here. Now don't get me wrong, in the medium term, I'm still long biased right up to this pivot high as a target. However, this short setup I'm talking about is just the intraday setup. Okay, so let me explain this intraday setup I'm talking about in more detail. So let me go over to the daily chart. Alright, so on this daily chart, the last short trade that formed was right here, a couple days ago. Now ideally, in order to take this short trade with the stop loss right up here and a target being right back down here, I do want that weekly second red candle to form first. However, often in these kind of setups, even if that weekly trade forms and it does ultimately fall down to its target, the risk reward upon entering that short trade is often very bad. So one way I'm looking to trade this setup is even before I get that weekly confirmation of that second red candle, if price pulls back close to my stop loss level, which is right here, while maintaining week long price action on the lower time frames, I may take a short entry even before that weekly confirmation I was talking about. And so since I may enter this short trade without confirmation, that will automatically decrease my risk because the distance between my entry point and my stop loss point gets minimized. Now this is a fundamental dynamic in trading in which the more confirmation you have, often the trade setup's quality is decreased. So in other words, your profit potential decreases also. Now moreover, hypothetically, if I do enter this short trade even before that weekly second red candle confirmation, if that red candle on the weekly chart does not form, then I will abort this trade altogether. Okay, but aside from this intraday trade, for the time being, I'm waiting to see if one of those two setups form that I could enter with my medium-term bias right up to this pivot high as a target. Now, if you're having trouble understanding what I'm talking about within this lesson, please watch my price action trading course, where the lessons are designed so that the viewer could understand how to trade price action and thus understand the content in these forecasts and analysis. Okay, let's go on to the dollar yen. Alright, this is the monthly chart. We'll start off with an overview. So ultimately, I'm targeting this pivot low right here at 101. But before that, I was talking about the pullback to 109 and then down to 101. So in the long term, I'm still short biased right back to this 101 pivot low level. However, since I'm waiting for this long momentum to slow down a bit, in the medium term, I am neutral biased. Okay, let's talk midweek price. Alright, this is a weekly chart. Now, the first sign of waning momentum we wanted was 2 red candles on the weekly chart, and that formed 2 weeks ago. And the reason why I wanted 2 red weekly candles is because this long trade all the way to the 109 target was on the weekly chart to begin with. So if there was weekly long momentum, we also want to see weekly waning momentum. Okay, so that first sign of waning momentum was confirmed 2 weeks ago. Now, the second sign was on the monthly chart, so let's go over there. Alright, so on the monthly chart, there was a breakout of this prominent trend line right here. That breakout being this candle right here. Now, since this trend line was so prominent, a breakout long of this will be very long biased. However, since I'm looking for waning long momentum, I want to see a breakout back in to this trend line, causing a failure of this long breakout, right? Now, last month, we did not get that breakout back in. So at this point, I'm waiting to see if we could get a break back in to this trend line this month. Alright, and in the meantime, another sign of waning momentum will be on the daily chart, so let's go over there. Alright, so on this daily chart, the last long trade that formed was right here. And this long trade was very strong. And then we had a weak short trade and another weak short trade formed 2 days ago. Moreover, I did take a small position long with a stop loss being right here. However, my main target was already hit, so I'm taking very small targets simply for the reason that in the long term, I'm still short biased right back down to these levels. Alright, so the way in which this daily chart can show waning long momentum is like I mentioned earlier, even if this long trade was very strong and these short trades being very weak, if price still stops out this daily strong long trade at the stop loss level right here, that shows waning long momentum. Now let me explain this to you on the weekly chart. Okay, I mentioned this earlier, but on the weekly chart, the last long trade that formed was right here. And to me, that target was this 109 level up here. Now what commonly happens when trades targets are hit is the market pulls right back just to stop out the traders that are still holding long positions from its last long trade, and that stop loss level being this pivot low right here. So in other words, if this target is hit, eventually we should get a lot of higher time frame pressure down. And the first sign of this higher time frame pressure down will be that the lower time frames long trades will begin to fail consecutively. So in this case, there was a strong daily trade right here like I just showed you earlier, and its stop loss level is right here. Now if price could come back and stop out that daily long stop loss level, well, that shows that the weekly chart's momentum down is kicking in, simply for the reason that the weekly long trades target has already been hit and price is coming back down to stop out the traders that are still long this weekly long trade. Okay, so for the time being, let's just see if price could come back and stop out that strong daily long trade right here. Okay, so that's it for the midweek analysis. I hope you guys have a great rest of the week, guys, and thanks for watching. Okay, bye.